Afternoon, guys. It's your boy Bosque96. Okay, but now we're going to talk on the economic podcast. I'd like to welcome you, and please don't forget to subscribe. Don't forget to like and share our videos. Okay, today we're going to talk about Powell's speech because he was having a speech on Tuesday or Wednesday, I'm not sure. And thereafter, we're going to talk about why Bitcoin was created since the banks are falling down, and it's going to enhance. It has enhanced the true nature of Bitcoin. And thereafter, we're going to talk about SA stocks that is having a losing streak since 2018. Tango. Okay, guys, let's get on it and let's listen to this Powell where he explained latest change in the Fed speak after another quarter point hike.
Economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. We will closely monitor incoming data and carefully assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation.
Was a pause considered for this meeting?
So we did consider that in the days running up to the meeting, and you see the decision that we made, which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really it is that the intermeeting data on inflation and the labor market came in stronger than expected, and really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year more than we'd expected at the time of the SCP in December, the time of the December meeting. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening in credit conditions for households and businesses, and thereby weigh on demand, on the labor market, and on inflation. Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment today with any precision whatsoever. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes some policy firming may be appropriate.
Mr. Chair, can you explain the difference between ongoing rate increases and firming? Does firming imply a rate increase per se, or could policy firm without you increasing rates?
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some as opposed to ongoing. So we clearly what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time, and in principle, if that means that monetary policy may have less work to do. We simply don't know.
Do you have concerns that the hike you did today could further exacerbate the problem in the banks?
No, I mean, with our monetary policy, we're really focused on macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about the situation in the banks, we're focused on our financial stability tools, in particular our lending facilities, the discount window, and also the new facility. So we published an SEP today, as you will have seen, and it shows that basically participants expect relatively slow growth, a gradual rebalancing of supply and demand in the labor market, with inflation moving down gradually. In that most likely case, if that happens, participants don't see rate cuts this year. They just don't.
Okay, as you can see, guys, we got ish. Yeah, the rates, the interest, the Fed has increased with 25 basis point. That means yes, they are fighting for the inflation to put it on down to 2%. But you can tell what since Fed has put the 25 basis point on the table, so you can tell even the other markets are going down, crypto is going down these days. So you can tell what as you can see in November last year when they have that meeting, Fed increases the interest rate with 50 basis point, and the price of cryptos and stock markets went down, even though early this year started to go up, but it's just repairing their loss. But now the Fed has been doing the quantitative tightening. That means they are not printing money, and thereafter they are tightening even the interest rate. So that means yeah, we're going to hear maybe in June when they have another meeting what are they going to do thereafter, because you can tell look, even SA stock is like the longest losing streak since 2018. The FTSE stroke JSE Africa All Shares Index fell as much as 3.2%. It sharpened intraday decline in more than 8 months. So you can tell look, okay, yes, things are going the way they go, but yeah, we still have a challenge that is still on the table. And thereafter, I'm going to conclude it with this article, whereby they talk about, let me check it again, whereby they're talking about why Bitcoin was created and for what good reason. So as you can see, it's so hard. It's so hard. Because even the US regulator shut down Signature Bank designed to insolvency, and the CAF Finance trading volume reached 7 below historic high after USDC depeg. So you can say, look, it's yeah. It's tough. Because inflation, yes, is down, but they are planning to put it down on like 3%, 2%. Yeah, it's so hard, Buffett. It's so hard, but Bitcoin can still crack 50,000 if gold correlation continues. And Bitcoin was created to be the money that is decentralized without no central authorities. So Bitcoin is going up because banks were falling down. Yes, they have bailed out the banks with 0.3 trillion. But many people have taken their money from their banks to Bitcoin and in US dollar. So you can tell, look, they trust Bitcoin and US dollar as money that can hold the value of their money. So next week Friday, we're going to talk about the market watch and the news that is going on in the market. But you can tell, look, right now we're waiting this Fed meeting, and yeah, Powell has spoken. So yeah, it's still tough. Our Fed is still tough. So just do what we do best, and I'm continue to do what I do best. See you next week Friday. Thank you.